When you think of the S&P 500, we have seen 4 record highs already this year, and it is only April. In 2024, we have gotten off to a red hot start. Even over the last week, we've seen a little bit of pullback, which is kind of normal, but the S&P 500 has closed and gained about 5% so far already. Now, traditionally, when we see all-time highs that are being broken, the S&P 500 usually is about 12 to 15% up in the year, which means, is it a good time to invest? With record highs, is it time to put money in the market? The answer, in my opinion, is always yes. When you look at some of the technology mega cap companies like the Magnificent Seven, they have played a really big role looking at Nvidia, looking at some of these massive AI technology companies that we have been seeing really driving the market, but there's also a big drive with mid cap technology, which we're seeing. But the question in this video is, what has Berkshire Hathaway been up to and what has Warren Buffett really been focusing on? That is what I want to think and what I want to go over today. Now, anytime that I see Warren Buffett's name, I pay attention. I read the articles, I see the news. I always want to see, because we know he is the CEO of Berkshire Hathaway, which when you look at a fund, when you think of thinking big, looking from 1964 to 2023, Berkshire Hathaway has gained 4.3 million% return. That is right. 4,384,748% return, which means this fund is compounded annually about 19.8% and nearly double of the S&P 500 in the same time frame, which is incredible. So when you think of someone who knows investing, Warren Buffett is the one that I always rely on. Now, with these very impressive returns, believe it or not, it is really a very straightforward, simple investment style. Now, we've also heard when you're putting money into the stock market, it is really time in the market versus timing the market. It is near impossible to time the market. Now, when you look at the 5 largest things that Berkshire is holding, it is Apple, Bank of America, American Express, Coca-Cola, and Chevron are the 5 biggest holdings. Now, these alone make up almost half of the position that Berkshire Hathaway does have. So kind of crazy to think that these blue chip companies that are really not huge, poised, everyone is investing in Nvidia and a couple other ones, but also when you look at the excessive profits that he gets because they have so much invested, when you look at the dividends, when you look at the share buybacks, it is literally the compounding interest that is going to make him a trillionaire and could be, depending on how long he is alive, the first trillionaire that we're going to be seeing. So what has he been up to lately? And again, anytime that I see news on him, always paying attention. So he has poised in about 10 million shares of Apple, putting him or roughly adding around 30 million shares in a position into Sirius XM satellite radio, which we know this is something that comes standard in a lot of different cars, but that is taking a very big position in a company. Now, of course, when you think of cash sitting on the sideline, and the reason he's really sitting on $1.6 billion of cash, that is right, liquid cash, that is just kind of sitting around, and marketable securities, is the reason waiting for the Fed. Most of us that are looking to invest, they are waiting to see exactly what the Federal Reserve is going to do. If they're going to go ahead and put or lower rates, is it going to impact the economy? What is it going to look like? Like we were saying earlier, is now a good time to invest? One hand, a lot of investors are kind of turned off because it has been those record highs in the S&P 500. By, of course, seeing Warren Buffett really sitting on the sidelines with an absorbent amount of cash, again, can kind of think about how conservative he is with the investing. But when you look at the Federal Reserve, again, looking to lower interest rates, majority of the time when rates are lower, companies can borrow money at a lower rate, which means it is a perfect time to go ahead and invest. Now, in addition, if you're looking to spread out the risk, like I've said before, the VUG or the Vanguard Growth Fund builds some risk mitigation in there, also builds out diversification in one exchange traded fund. Now, if you're looking to get into investing or if you're brand new, go ahead and click the link down below for M1 Finance. It is a referral link, but that is where I do all of my investing. If you've checked out my personal portfolio, that is where everything is because, of course, I do not buy individual stocks. Warren Buffett has his 5 favorites that he holds a majority in, of course, getting those sweet dividends in there. But overall, I don't do the research. I don't spend the time and effort into individualized companies. I would rather spend that getting into those ETFs or those exchange traded funds, also giving me with that VUG exposure into a large tech enterprise, which of course it holds a very, very heavy amount. I believe it's around 220 stocks that are poised for growth. Now, of course, I would definitely want you to look at individual dividend payers. This is another one where if you're looking to put money into a growth, you kind of want the counter side with kind of the business development or really the dividend payers, which of course you want to make sure it can be taxable. Talk to your tax advisor before you're getting into the dividend ETFs. But overall, a combination portfolio like what I consider, I hold actually a 4 ETF portfolio. If you guys have checked it out, having over 100,000 in there, we are doing incredibly well. We're up 60% in the last 2.5 years, which is pretty cool. Not quite up the 4 million% that Warren Buffett is up, but overall, we are doing well. We're mitigating all of the risk. We have it quite diversified. And of course, when it comes to my portfolio, we have the VOO, which is the investment in the S&P 500 in its entirety. So when we talk about where the S&P kind of goes up about roughly 10% every year, makes a big difference. Then I do also hold the VUG, which we were talking about, which is that Vanguard Growth Fund, my best performing one. Now, of course, this one does have a little bit more of the volatility, and it will go up and down kind of depending on where the market is. But overall, the growth of this ETF has been incredibly well. Then, of course, I hold the SCHD. Now, that is the Charles Schwab, which is my dividend part of the portfolio. So this allows me some income generation to reinvest. Now, of course, if you're going in here and you are buying dividends, a lot of people at some point of their life, you can supplement your investment portfolio with the dividends you're getting to essentially supplement income when you're getting money from, let's say, Social Security. You can use that as the supplement when you're no longer working that 9 to 5 once you get to a certain growth factor. Now, for me personally, I get those dividend ETFs. The dividends come in every quarter with the SCHD. They are reinvested right into my portfolio through M1, allowing me literally to snowball that ETF growth and really go ahead and build it much faster. Because not only am I making weekly contributions into that portfolio, we are also seeing the growth factor that we're seeing just from the portfolio itself. Then you compile the dividends that are going in there. It really starts to snowball. And of course, when we think of the eighth wonder of the world, that is compounding interest and making sure that you're taking advantage of it. Very similar to when you buy, let's say, a mortgage at a 30-year mortgage, you actually pay for your house about 2.5 times because of the interest you pay. And of course, I do not want to pay interest. We are looking for the debt-free journey. So let me know in the comments, guys, do you invest in individual stocks or are you choosing ETFs like I do? Are you interested in REITs? Are you into cryptocurrency? A lot of speculation is still saying that Bitcoin is going to go 100,000 plus this year based on the halving that happened on the 20th. So again, let me know in the comments what you guys are investing in, or do you just roll out with like Warren Buffett and invest with the majority of his portfolio looking at Apple, Bank of America, American Express, Coca-Cola, and Chevron, which again is the bulk of Berkshire Hathaway's. Go ahead and investing in those, and that is what they are reporting. Now, of course, those companies offer a pretty good dividend, pretty good growth record, but you notice that big names again in there like Nvidia, and a lot of those are not really poised as the largest holdings that he has. So guys, that is going to do it for today's video. Let me know in the comments what you guys think, and as always, thank you guys for watching.